Hey guys, I believe we are live now. It
Yeah.
is not Wednesday, so don't think you're looking at the wrong thing. You're at the right place. It's Tuesday at 9:30. Recently, like 4 hours ago, Tesla announced that they were doing a 5-for-1 stock split. So Leon and I decided we want to, of course, do what we do, educate you all on what that means for our community. So Leon is going to talk about that for a hot second.
Yeah, so got a lot of questions about the split. People are asking, what does it mean for them as owners? What does it mean as far as buying it going forward? It essentially means nothing. So what's crazy to me is that we just saw Apple split their stock, and now we're seeing Tesla do it. And what's weird to me is that, so fractional shares, for those who don't know, fractional shares is a way to buy an expensive share at a fraction of the cost. So if a share is $100 and all you have is $25, you can buy 25% of one share for $25. You don't have to have the whole $100 to buy the share. So that's what fractional shares allows us to do. And with all these splits, it's weird to me because, I mean, years ago, when these companies actually were running up in price, before fractional shares became like mainstream, they would never split their stock. But now that we have fractional shares, now they're deciding to split their stock, even though people can buy shares at a fraction of the cost anyway. So it's just weird to me. But so we're just here to kind of educate everybody on what this means. So the split by Tesla is going to be a 5-for-1 split. The stock is currently at around right about 1,400. It's going to drop to about 280 some dollars, maybe 300, because it's up 7% in the after hours. So it's going to drop, significantly. But it doesn't mean anything as far as the value of the stock, because you're just taking that 1,400 and you're dividing it by 5. So, and as I said, right now, if your broker allows fractional shares, you can go in there and buy a Tesla for $285 if you want. You just buy whatever percentage of that number is of one share. So the split literally means nothing. It's mostly just a marketing ploy by Tesla and by Apple to bring more people into the stock and drive the price up. So for people who are wondering, what does it mean for them? If you're an owner of the stock, it means absolutely nothing. Nothing's going to change. The value of your stock's not going to change. Your share count is going to increase by double or by
5.
By 5 times, right? Yeah. But the value of your investment is going to be exactly the same. So nothing's going to change for you as owners. If you don't own the stock, same thing. Nothing's really going to change. You just buy the shares at a fifth of what they are now, but you're not getting any sort of discount because the value hasn't changed. So, just want to put that out there that the split really means nothing. It's more of a marketing ploy by these companies to bring in more investors.
I think marketing ploy is like a hard word, but it
is what it is. There's tangibly no actual effect that a split has on a company's fundamentals, on its products, on its marketing. Nothing. It's strictly a marketing ploy.
Well, I mean, sometimes they just want to bring new money into it.
The marketing ploy is to bring in new money. That's what I'm saying.
Okay. And then Elon Musk is the type, like from a character standpoint, that would just want more people in his stock. And he's since the beginning, he's been one of those proponents of, I want as many people to be able to afford my stock as possible, to the point where he's like sabotaged his own stock price before because he felt like it was overvalued. But right now we're talking about a 5-for-1 stock split. And what does that mean? Like when it splits, when it splits, you'll have 5 shares, as Leon said. And for anybody who's interested in like really understanding how stock splits or how why do this on the heels of Apple, right? Apple just announced their stock split, and now all of a sudden here comes Tesla with a 5-for-1 stock split. It could be the fact that it's drawing attention away from Apple's split because Apple, you're talking about a company that's $1 trillion, and now they're about to do a new stock split, which is going to draw more money in, which is going to increase their market cap. I don't know. Maybe it's a strategy. We don't know. But the reality is, for you all who are like having panic attacks or overly excited, we want to just understand from just a monetary standpoint and what it means. It doesn't mean all of a sudden the company is more profitable. Please do not confuse a stock split with a dividend increase. And there have been people who think it's like the same thing. Like if a company issues a higher dividend normally, if they have a very profitable quarter or some span of time, and they want to share those profits with stockholders, a stock split is completely arbitrary. If the board elects to have a stock split, there is going to be a stock split. So That's what it means. It wasn't a very profitable or extremely profitable situation where Tesla said, you know what, because of this profit, we're now going to go split. That did not happen. And so for you all who, we decided to go live because we did a detailed outline of this inside the IEA members platform, talking about strategies on how to actually buy or hold your positions or get out of your positions, depending on what you want to do. That's inside of our platform. But we also were like, you know what, again, we don't want it to just be about our members and we leave the general population out, because right now it's a lot of people trying to figure out what to do with this 5-1 split that was announced again, like 5 hours ago. The stock split date is scheduled to be August the 21st, and the execution date of the split. The trade date, that means the day that it will actually trade adjusted pricing will be August 30th or 31st.
I think it's 31st.
So the question came in, what do you think the stock will drop? Oh, if you have questions, we have like a lot of people watching this. So if you want to share it, it's a great time to share it. We're here to answer questions. But the one came in, what do we think the price will drop to post-split? So Brian, what you want to do is just divide the price by 5. Right now, I think they're trading about $1,400, let's just say $1,400. So it's going to put the price somewhere about $275. But in aftermarket trading right now, Apple saw an increase about anywhere from 5 to 8%, like stretch increase in the stock price trading after hours. And the reason I bring that up with your question, what will the post split price be? It depends on how much the stock continues to run up between now and the time it splits, or go down, because it's a high probability you're going to see profit taking at some point from those who have bigger positions in Apple, and they know that the stock price actually means nothing fundamentally. They're going to start doing some profit taking, and that's going to add a lot of volatility to the stock.
Yeah, so it's really, to answer your question, another way to answer your question, Brian, is, Brent, I think you said the date was the 21st, right? Will be the So Brian, whatever the price is, whatever the price closes at on August 21st, divide that by whatever the closing price is, what, either the day before or the 21st? Which one?
It's the day before.
Day before, okay. Yeah, so whatever the price is the day before August 31st, just divide that number by 5, and that's what it'll start trading on August 31st. So it's just, again, a 5-for-1 split. Whatever the price is the day before the split actually happens, which would be August 30th, divide that by 5, and that's what it'll start trading in on August 31st. That'll be the share price. But again, as we said, there is no you're not getting a discount. There's no hidden trick here. There's no benefit. Like I said, if your broker lasts for
real quick, yeah. We don't want to say it's no benefit, because the benefit is really, it's not real. I mean, it's I don't know. It's like a
maybe benefit was the wrong term. You're not getting a discount. Let me say that.
Yeah.
You're not getting a discount between what the price is now with the price of the 31st. All it's doing is just taking the stock price the day before, dividing it by 5, and that's now what one share is worth. Again, you can do the same thing today. You can take the current share price today, divide it by 5, and go buy 1 fractional share. It's the same thing. So there's no discount being had by waiting till the split happens. You can do the same thing today.
Yeah, and so for Phaedra, you asked, didn't Apple just do this? Apple announced it, and the interesting part about this is Elon Musk came out and not only announced it, but their their split date is going to be before Apple's. I want to say Apple's is the 23rd, and they're saying theirs is going to be the 21st, which, I'm really curious as to why it came out now and why the date is going to be the 21st, because that's going to pull a lot of money away from Apple, from people who are going to invest in Apple. So, I think there's definitely some strategy in it to say, you know what, before you all put in this huge infusion of money into Apple, put it into Tesla.
Could be. Yeah, definitely could be.
And we have another question. What? Like, what? Did that really happen? Yes, it really did happen.
Yeah, it was just announced, like Brent said, like 4 or 5 hours ago. I think right as the market closed, they announced a 5-for-1 split, which took everyone by total, complete shock. But again, I want to make the point that it's not a big deal. Like, people are freaking out about this, but it doesn't mean anything. You can buy Tesla today for $280. with fractional shares, or you can wait to the split and buy it for roughly, if the price stayed where it is now, $280 then. So there's no discount to be had. It's kind of, I mean, I actually look at it, to me, it's kind of like smoke and mirrors. It's just a way to draw people in to buy the stock and think they're getting a discount when they're really not. They're just like formalizing fractional shares into the market.
Yeah, and Brian, this is actually a great question. And you are an IEA member, so we're going to answer this question inside the platform simply because I don't know the answer to it. Leon, if you know the answer,
what's that?
Is what happens if the split date is the 21st, but the split adjusted trading doesn't happen until the 31st? What happens if you buy stock in between that time period?
Good question, Brian. And I, as Brent said, I don't know. So we will do our research and we'll definitely post it on the membership platform for you.
Yeah, that's actually a great question. I hope you all visit us over at, even if you're not a member, visit us in the Facebook group, Investing Education Academy, because I think this is a great topic to discuss. We've already done videos on Apple and what we think, and we posted some of them in the platform. So if you are a member, if you go to the platform and just go under the features or recent posts, you'll see the one on Apple. Actually, you'll see the one later on tonight on the more detailed one on this Tesla split, talking about strategies, buy, hold, and some other things. But yeah, so the way it works with a dividend, Brian, just to kind of give you some direction, there's normally a dividend X date. And if you purchase a stock after post the dividend X date, you simply buy it at the price that is trading at, but you don't get the dividend. So with the stock split though, I mean, the stock has to split. That's a great question.
Yeah, I don't know the answer to the question, Brian, and I'm kind of trying to Google it real quick. But like I said, if we can't answer it tonight, then we'll definitely let you know on the platform.
Okay, so Phaedra, you asked quite just flat out, should we buy Tesla? One of the things is, number one, it depends, because we have to say this because it's true. It depends on your position or your the purpose of your portfolio, like your asset allocation, what your investing strategy is or philosophy is. So I'm gonna answer it for me. And so for me, I would actually buy Tesla because I think it's gonna do many more things than just this stock split. I would not buy it just because of the stock split. If number one, I already own Tesla, so full disclosure. But outside of that, I just like the way the company's headed. Would I buy Tesla simply because of the stock split? No. Would I buy Tesla because I like the company? Yes. And Phaedra, you're an IEA member as well. Please look at the video that we posted, because we're actually talking about some things that's happening with Tesla outside of this split that most people don't know about. And it's going to have a profound effect on the company. So within the next 2 hours or so, we'll have a video up in the IEA platform specifically talking about the other things happening with Tesla that like everybody should know about. All right. Brian said, y'all need to join Stop Playing. If you had so much value, it's like the cost of 4 premium coffees. He's talking about joining IEA. Well, thank you, Brian. But regardless, we're trying to be here for you all, whether you're a member or not, because again, like I said, Leon and I have already recorded a video for our members. So we're doing it just because we want you all to know. And again, after looking at what's going on with the wealth gap and really the ROI gap, it has to be a solution, and the market can be that solution. I don't think some people really believe in the market because they haven't felt it. They haven't seen what the profits can look like. But I can tell you now, I had a client, I talked with a client today, or an IEA member, and this person has made $289,000 in profit, or unrealized profit in one of his 4 accounts from the information he's been getting from us. And so, he made his decisions for his portfolio, but we talk about different stocks. And this guy's $298,000. Like, I saw the account today. But it takes time. It takes time. He's been invested, I think, 4 years, I think.
Yeah, but that's still a crazy return in 4 years.
Yeah, it's like $60,000 a year or something.
Yeah. Yep.
Beverly said she was about to correct this in by saying unrealized profits. So if anybody missed tax attorney Beverly Winstead, she took the hot seat with IEA on Saturday. And when I say she dropped jewels, I mean she went through qualified dividends versus non-qualified dividends, what was it? The profit taking, and also what was it? Loss.
Another one. How do you use losses to lower your tax obligation?
Yeah, and also to offset profits. And I mean, she gave us tax strategies on how to manage your stock portfolio. Mm-hmm. So if you all haven't really taken the time to figure out what's going on in IEA, these conversations are happening on a regular basis. And that one with Attorney Beverly Winstead, it was amazing because it gave us an opportunity to really see how a tax attorney manages their stock portfolio. And the jewels, actually the conversation as a whole that came out from that, it was a great conversation. So anybody who saw it instantly can implement some of those strategies that came about from there.
Definitely.
All right, so I see a bunch of wows. I've been working with you guys for 2 years. Are they recorded? Yes. All of anything for the community is recorded and earmarked in certain groups inside the community. Actually, some people have this is crazy, but it's true. People told us they've taken us on road trips now, in the shower. They put us on the television, all kinds of stuff.
And it's great because the information is being shared to them. They're watching it with kids, they're watching it with family. So yeah, it's great. I mean, we're getting this information out there, which is our main goal.
Yeah, that's the biggest goal. We've been asked to develop programs for school systems now, and some people have asked us to create curriculums for their family to help them start having the conversations about, the person I talked to today showed his account to his mom, basically to show her you need to be doing this. And his mom never thought, older generation, everything goes into the stock. Everything goes to a bank account. He's taken over her account for 20 days. 20 days. He's gotten, I think it was 22 months worth of interest that she received at her bank in 20 days in the market.
20 from 22 months down to 20 days.
Yeah.
Yeah.
It was incredible. And he was the part that was so great was even part of that. Leon wasn't part of that. This is just stuff that he's learned from being in the ecosystem.
But the key is he's sharing it. He's bringing other people into it. And that's the real goal.
Yeah, his mom made 22 months of bank interest in 20 days. So that being said, we really wanted you all to talk. We wanted to talk about Tesla today, and again, the actual fundamentals of the company have not changed at all. At all. The split just simply means it's going to be attractive to a bunch of retail investors, and that normally just means new investors. But the reality is it's probably going to drive the price up. Let me see. And a couple of you all asked if we can drop the link to the membership platform. We are dropping it right now. So it is there. And I think 2 weeks ago, in July, we had a Ask an Expert series with a estate planning attorney. So attorney Cheryl Henderson, she actually graced us with an understanding of how trusts work and how to move, or does it make sense to move your investment account into a trust? And that's something we had never discussed. So
right,
that was a great conversation, even understanding what a will would do with the account versus it being in trust and how that affects the trustees and the executor of the estate. It was a great conversation, and it's for the members. It was in the members platform. It's recorded. It's in there. You guys can go back and watch it. It had a lot of questions coming up about what you can do with powers of attorney and other things, but it was a lot of information. And attorney Winstead and Attorney Henderson are both IEA members. So it kind of tells you about the quality of people who are in the platform, i.e., I saw Brian's name pop up, and Brian is the owner, CEO of Black Speakers Network. And we're talking about an organization that has 10,000 plus Black speakers in this ecosystem, and over 500 that are actually in the inner circle or in his paid membership. And I mean, if you haven't checked out Black Speakers Network, I would suggest you do so as well. But he's a member of IEA now, and it's really cool to see him in because he's able to take some of this information and give it back to his community. But the goal is that we reduce this wealth gap, everybody. I mean, it's really important. We're talking about African Americans, their household income. Oh, you want to give them the stat, Leon?
Yeah. So kind of the kind of our impetus behind all this is when we did a little research and found out. I mean, a lot of people heard about the wealth gap, but we actually did the research and found the number, and found out that African Americans today have just now caught up to white wealth, what white wealth was back in 1962. So we're 60 some odd, about 60 years behind white wealth in America. 60 years. Black America just caught up to white wealth, what it was back in 1962. I mean, stat just blew my mind. We dug a little deeper and found one of the reasons behind that is that on average, white households earn 139% more on their money than Black households. So I'm gonna say that again. White households on average earn 139% more on their money than Black households. So, I mean, and that right there, I mean, that's the whole that's one of the biggest reasons. That and the pay inequality, from jobs are two biggest reasons why we have the wealth gap. And Brent and I's mission really now, I mean, we can't control how people, how companies pay people, but we can help people, the money they do receive from their job, how they invest it. So that's something that we kind of can't control as citizens, what we do with our money. So our goal is to really shrink the ROI gap, which will help shrink the wealth gap. So that's what we're bringing here with IEA.
And there's also the financial literacy gap, and that's just our parents telling us shut up, it's not your money, don't worry about it, or being very secretive with their wins and losses. We're like, forget that. We're putting everything on Front Street. And again, even bringing you all this information. Some of you all knew about the stock split, some of you all didn't. But the reality is you're going to hear a bunch of media just giving all kind of spins on it. And we're not saying take this as gospel, because you should never do that, even with us. But at least you can say, oh, I heard about that. Or when that conversation starts around the water cooler, but okay, Zoom, because
right, Zoom that, yeah.
It's one of those moments where it's like, oh, you know what? We talked about that in our ecosystem 2 days ago, like 5 hours after it happened, versus we didn't have this. Some of us didn't have this before, where as soon as these things happen financially, we had somebody educating us on what it means for our money within minutes or hours. And so Malcolm just asked the question, can we talk about the difference in how much a share would be before and after the split? And so, Mo, it's the same price. It's just divided by 5. Just for an example, when the stock is trading about $1,400 a share right now, when the stock does its 5-for-1 stock split, you'll now own 5 shares, each trading at about roughly $280, $300. So, multiply 280 by 5, you're getting back to that $1,400 range. That is that simple. I mean, literally that simple. But it feels good, right? It feels like we're getting something for a discount. And the reality is IEA members will know what that means.
Right.
But outside consumers, they're going to think it's on sale, and they're going to rush. And it is, again, high probability, not saying it will, that it's going to drive the price up without merit. But again, the reality of the market is there's certain aspects to the stock market that don't make sense. And there's certain aspects to how people invest that don't make sense. And because they don't make sense, they actually do make sense. So we know what it's going to do emotionally when people see that price go from 14 to 280, they're going to want to buy it because they felt like they missed the boat, and now they have an opportunity to get back on and get a life jacket. So because we know that, we can now play that angle. And that's what we talk about inside the platform. We're going to, again, we did a complete detail, and it's something happening with Tesla. Nobody even knows about this, way bigger than any of this stock split stuff, like way bigger. And so the stock split will actually contribute to it, but it's a much bigger thing that we're going to discuss.
And we mentioned earlier, I believe we did, about fractional shares. If you don't know what that is, like we said, all it is just you can buy a percentage of one share. So like I said, if you have $100, if the share's $100 and you only have $25, you can buy 25% of one share. And you can do that right now. So that's what we're saying. The split doesn't really matter, because if you, as Brent said, the stock price will say be $280 after the split. Well, tomorrow you can go buy Tesla for $280 using fractional shares. So if you don't really know what that is, just go ahead and Google it. Maybe ask your broker, do they offer it? But this split, like I said, doesn't really mean a lot in terms of the buying the stock, because you can buy the stock today at what the split will be in the future once it does split, or you can wait. But the split really means nothing as far as the absolute value of the stock and the share price.
Yeah. And we had somebody saying, can they just take profit from it? If you can time it correctly, you can. We in IEA are not fans of day trading because unless you understand what you're looking at, and normally if you're going to do that, I think most of you all are going to look at the technicals. When it comes to a stock split, it's really emotional. It's an emotional play. Is people fundamentally nothing's changed. I mean, you can look at volume and compare normal volume to the increased volume and the price fluctuations, but it's an emotional play. So you can, if you understand consumer behavioral patterns, you would do just as well trying to ride the wave.
Yeah, right. I mean, as Brent said, most stock splits typically, not all, but typically when a split is announced, stocks tend to rise because everyone's trying to front run the emotional buying that's going to happen, because everybody's like, oh, let me get in now. Once it splits, I'm gonna have more shares. Like it's just this whole mind game that again really means nothing in the end. So if you want to play it that way, I mean, you could buy it now and try to kind of gain some of that as it runs up into the split. But again, that's gambling. That's a crapshoot. That's not investing. But that's to each person make their own choice.
Yeah, and so my daughter, she loves having quarters instead of dollars. That's literally what's happening with the split.
Right, exactly. Yeah.
That's the best way I could describe it. Like she loves having 4 quarters, and she tells me, "But Dad, I have 4 of them. You only have $1." And I'm like, "Babe, it's the same thing. Actually, I don't have to carry around all those quarters."
Right.
Like, but it's 4 of them, and so that's exactly what's happening with the stock split.
Mm-hmm. Yep.
And Phaedra, I want to say thank you for you saying you appreciate us. And Phaedra's comment was about the fact that she now talks to her daughters and her grandkids about stocks. That's what this is about.
Yep.
We just, it's going to be people who they peek in, what's Leon Brent doing? What's this IEA thing? And they're going to leave. And we know that that's fine. But then over time, they're like, oh, they're still here. Oh, people are actually making money. Oh, okay. These things are happening. And if the mindset is going to start to shift, because if you have a savings account right now and you're just watching all this stuff happen and you think, oh, well, the market's crashing, so I'm holding on to my savings account, you're guaranteeing yourself a loss. If you are holding money in a savings account beyond your normal emergency reserve, 3 months if you're married with dual incomes, 6 months of total expenses if you're single, and business owners, we normally say you're looking at about 8 months. You want to have about 8 months of business overhead expense on hand. But other than that money, if you're just holding money in a savings account, you're guaranteeing yourself a loss. Like every time you go to your savings account, I hope the thought of Leon and I haunts you, and not in a bad way, but in the reality that the only way sometimes we can get things done is to really like find that pain point and push on it. Mm-hmm. And if you ever exercise, any of you all have ever exercised, when you're done and you get a massage to get all the pain worked out, they have to put a certain amount of pressure on what already hurts in order to make you feel better. And so that's kind of what Leon and I, when we talk about the savings account thing, yeah, it hurts to hear it and know I have all my money in the savings account. I can, again, if you guys go to the Facebook group, one of our people, they had a savings account when they first came into contact with Leon and I, and we told them like basically get out quick. And it happens, it was 9 years ago. One of the returns in that account is over 1,000% rate of return. Mm-hmm. Over 1,000. I mean, we posted it. So you can go to the group and see. It's a screenshot of the account. So again, Investing Education Academy, we've been talking about this for years. I'm just happy whenever you get in, you get in. And honestly, even if it's not with Leon and I, just get in.
Yeah, find the education somewhere, because we gotta close this wealth gap and this ROI gap quick.
And Malcolm, your question was, is this a tactic from companies to drive investors to their company without ever doing anything significant to warrant future investments? Yes, it is.
Yes, 100%. Yeah, and actually, if you look at the release from Apple, Tim Cook he said that. He said this was, they're lowering the price to allow more investors to buy their stock. He explicitly said that. So the reason Apple actually split their stock was to allow more. Now, of course, from his perspective, really, they're trying to drive their market price up, their market cap up, take them over $2 trillion. That then brings in raise their market cap, which they can actually use their stock as capital to purchase different things. But that's a whole other discussion. But Tim Cook actually said yes. The reason they split their stock was to make it cheaper for more investors to then be able to afford the stock. Tim Cook said that the Tesla split, Elon Musk hasn't said that. They haven't said why, but I suspect it's pretty much the same reason.
Yeah, and again, I still question Elon Musk's timing. Elon Musk's timing on the split, being so close to Apple's, and then Elon Musk is a very unique thinker too. So I wouldn't be surprised if he said he just wanted more people to have stock, and I would believe him. Like so,
I would.
But the shareholders make the call. It's not Elon Musk. And,
right.
And if the shareholders are making the call, it's because they want to drive more money to the company.
Mm-hmm.
Let's see. I wonder if the splits timing is recognition of an increase in new investors in the market. No. So the question is the splits indicative of so many new investors being in the marketplace? And no, I don't think so. Market has been doing splits since the beginning. When Leon and I first got into this game, it was a company called UnionNet, and that company like split beyond. I mean, I've never seen companies split like that.
Right.
And it's just the nature of how business works. At some point, they want to bring in more money. It may be for research and development. It may be for expansion into a marketplace. It may be acquisition of another company. It's a lot of reasons why companies do splits. So it's not just because there's new investors. I'm very positive that that's not it.
And there's actually no way to quantify that, because there's no way to know if there's new investors in a stock, because all you see in the stock turning is volume, but you don't know if it's old investors, new investors. You know if they're doing certain strategies. So there's no way to actually know if there's quote unquote new investors in your stock. You just see all that happens is volume is trading. So there's actually no way.
New investors in the market as a whole.
But again, I mean, we don't know. Like,
yeah, I don't think so.
Yeah, we don't know. Yeah, one you can't see. You don't know if new investors are in your stock, and then if are they doing this because of new investors in the market? Who knows? Yeah, that'd be total guessing, speculation on our part.
Okay, so we have a question. I'm not sure the statement of question. Let me check it out. All right, not a lot of investors know about fractional stocks. So what Tesla is doing is a mind game which will drive their stock prices higher. It's a double-edged sword in the sense of some people will be able to invest in Tesla because of the cheaper stock price, and that will help drive up the stock price. Yes, I agree with everything you just said. So a lot of people don't know about fractional shares. I think mind game might be strong, but I know where you're going with it, so I can agree. It is one of those things where it just makes people feel like they're getting a discount. Like Leon immediately said when we started, it means nothing for the fundamentals. It means nothing for the fundamentals. It has real meaning in what's going to happen. Like you said, emotionally to these people, and they are going to now feel like they can afford the stock, and they are going to go in droves and buy it, and it has a high probability of driving the price up. So all the things you said are true and could very well happen.
And remember, Tim Cook explicitly said he's doing this for the sole purpose to make the stock more affordable to more investors. Yeah. So he said it. So the point of that is to drive the stock price up.
Yeah. And if any of you all watch us and track us, we did one of our lives. We talked about Qualcomm, and Qualcomm's investment of $368, if memory serves me correctly, turned into like $30,400 in less than 2 years, because they did a 7-for-1 split, a 2-for-1 split, a 4-for-1 split, and all within a 2-year period. It was like 3 splits in a 2-year period, a $368 investment in Qualcomm. And this was right before the tech bubble.
Right before it imploded.
Yeah.
Yeah.
It went from $368. I'm gonna say this again. Turned into like 30,000 some odd dollars in the course of 2 years. All because of splits. I mean, that's really what was driving it. That, and they had a patent on CDMA technology, and we can go into another conversation about that. But
and also it was a .com boom. Everything was just exploding at that time.
This was ridiculous. I'm talking about like ridiculous. I agree.
Qualcomm was the cream of the crop, but I mean, everything at that time was common. But yeah, to Brent's point, it would split. It would jump up 200%. Split, jump up 200%. Split, jump. So every time it split, investors rushed to buy the stock at the quote unquote discount, which really isn't a discount, and it would drive the stock up more. I mean, Qualcomm, like you said, went from $300 some odd to $30,000 some odd in just about 2 years. Crazy.
Yeah, and then they did a 2-for-1 split in February. They did a 4-for-1 split in November.
Right, two splits in 1 year.
Yeah,
right.
That's clearly they were just trying to take advantage of like investors
of that time. Yeah, because I mean that was a buying frenzy then in the .com.
It was like blood in the water, and everybody was a shark. But the question came in from Malcolm: does the stock split increase the number of shares out? Just multiply times 5. The number of shares outstanding, not the value. So the value per share, you have to divide pre-split, divide by 5. Number of shares outstanding, to answer your exact question, Mo, yes, just divide by 5, and that's going to be the number of shares outstanding. Which is also why the market cap goes up if people start driving the price back up post-split, because now you have more shares growing again, and it could drive market cap up.
And remember, market cap is just the price of the stock times the number of shares outstanding.
Yeah. So, I mean, that's really it for us. Leon, anything you want to say?
Just recap again that the split fundamentally means nothing. No products haven't changed. Management hasn't changed. Revenue hasn't changed. Profit hasn't changed. It's just they're taking the stock and splitting it, dividing it by 5. You can buy a share at a cheaper price. You're not getting a discount. It's the same value. Tesla's worth, I think, like, I don't know, 100 million, 100 billion now. It'll be worth 100 billion after the split. It'll be worth the same price, the same value, pre-split and post-split. Just the share price will be cheaper on an absolute basis, but nothing has actually fundamentally changed about the company.
Yeah. And if there aren't any more questions, we're going to wrap up. But if there are any that maybe we just didn't get to, because there's actually a lot of people on here, you can go over to Investing Education Academy Facebook group, or you can go to IEAmembers.com and become a member, and we can continue this conversation. Like I said, there is more to what's happening with Tesla's future. Far more important than the stock split. And we've already recorded the video, and we're going to post it right after this into the membership platform. And that's gonna lead you to a decision on whether you buy or sell. We think it will. It might give you some direction. So look for it in a couple minutes. And other than that, thank you for everybody tuning in. Thank you for over 40 plus comments in a couple minutes. That's awesome. But again, take this information, digest it for yourself, talk to friends and family, start making like stock talk regular talk. It's not just on Wednesdays when Leon and Brent or IEA goes live. Stock talk should be regular talk for people of color. Everybody, have a great day.
Thank you.